Okay guys, right, we are back in business. Welcome to End of Day Debrief. We're going to have a little look at how things played out compared to what we were looking at this morning. Little bits of news that have come out throughout the day. This last move up, which has pretty much come sort of from the US pit session predominantly, or certainly in the last last hour or so, doesn't seem massively sort of news based in particular. Yes, we did get higher builds on the oil inventories, but not massively different to the API numbers. There's been nothing sort of concrete news wise. I think this is perhaps a case of a sort of risk off type play. I am happy to stand corrected if someone does have a distinct moment, and this is really important when you're looking at news, the moment that you could have executed that trade. And there doesn't seem on the entirety of this move down to be one moment that you could have said, yes, that was it. That was where the news hit and give you a trade. After the fact, you can read into this and suggest that it was based on the oil numbers, it was based on fears around pandemic coming back, but there's fears around pandemic coming back every single day. So there was never a point where you could say, yes, that is it. I can take that trade. And that's always the thing you've got to look at with news-based stuff is, unless there's a point where you could say, that's it, I can now click the button on it, the news is more just a flow of information. And there's a difference between a flow of information that you can then say, oh, well, based on that, this happened. Because equally, if it went up, you could find something as a reason for it to go up today as well. There's got to be, when you're looking for news, a point where you can say, right there is your point. One of the easiest ways to do this is to have a look at a 1 minute chart and look for a point where you've got a very, very obvious, very distinct pickup in volume. You go onto Eurostoxx today, for example, and I'll show you this trade in a little bit, where we did have news earlier and you got a very distinct pickup in volume. Since then, we only managed to hit that same amount of volume at the close. So this would indicate that it's perhaps not news related. We'll go further and we'll go and have a look at what else has been going on today, and you'll be able to see some of the reactions. Also, notably, gold has not reacted. You would expect in a risk-off scenario or risk-off environment that gold would be moving towards the upside, and we're not seeing that at all. So that's also something to pick up on. Right, so what has been the news that we have had today? And one bit of news is that the US is targeting 3.1 billion of EU and UK imports for new tariffs. So potential now that the trade war becomes between the US and Europe as opposed to the US and China, or takes on another element, US-China. So that was the one bit of news that did create a very distinct, very clear reaction this morning. What we also got was, excuse me, IFO. And what I thought was quite important about this is expectations. That whilst business climate is only marginally better and current conditions clearly worse, expectations are much higher. So the expectations going forward are positive. This is good news, particularly on the back of the positive PMIs that we saw yesterday as well. Now, excuse me. So taking this news on, let's go and have a look at what's been going on. Eurostoxx yesterday, we had this P-shaped day where, as I suggested in the mental session in the middle of the day, that we got a liquidation of these longs. And the question then was, are we in a liquidation day or a trending type day? Up until the last hour or so, we did actually look very much like we were erring towards more of a liquidation B-shaped type profile. It's then, as the S&P's broken down, that's then taken this further. We did have all the possibilities of this becoming trend, and this is always something to remember with any kind of liquidation day, and why I would always look to play the liquidation days in the direction of the initial liquidation. So that if you do suddenly get this very, very clean move to the downside, you're more tilted towards that. For the same reason, when we look at the news in a bit, you could have been tilted towards that in Eurostoxx anyway, Bund slightly less so. So we've seen the continuation, and crucially what we managed to do, and I mentioned this last week was we managed to get onto these poor lows that we established down at 31.92 that we established on Wednesday, and then managed to drop down onto once again on Friday. So you got these couple of poor lows. We tested down there and we've broken through, and in fact we are now currently trading down as far as 62. So we've actually managed to get all the way down here, getting down in towards this low volume node at 59. DAX has, by way of comparison, in fact already closed this gap and is looking slightly lower and is around about the equivalent of this high volume node in the DAX. So the weakness came in. We were very clearly tilted to the downside from the off. It was then a case of how you played this, and it ended up being a situation where the initial moves down gave you that liquidation opportunity, as I talked about at the midday, and then as this then progressed into the afternoon, once the S&P then starts to break down, that gives you another continuation opportunity. Right, so moving on from stocks, and why did this happen? S&P straight from the pit session, or not quite straight from the pit session, but once you got that oil inventory number out of the way, then we start putting in this larger move down. In fact, we'd actually gone for it before then. The large move down, you can see in the initial balance, we start up at around about 0.5, right on this key level that was in that older range. So if you're going to have a look from the morning, this range got the bad highs around 31.45. We've got this key sort of VPOC in the middle that suggested whilst we're above, we could be looking for a break of those highs. Whilst below, we're then looking for an attempt down that finds a lack of rejection, which is what we had every other time we've been down into these sort of 30, basically 30.60 down towards 30.20 area. We're getting rejected. S&P currently trading down at 30.25, and this is really important because we're now getting right down through the lows of last week, giving us now a chance for continuation. What's been important about this move is this has come not in an overnight session, not based on a close. This has come middle of the pit session. So where the volume is getting done, it's not giving a chance to reverse, and this is a different scenario to what we've seen recently. So this all comes from the beginning of the pit session, and once this has happened, look now on the profile, we're looking very, very trend-like, as I highlighted from this morning. So we now be thinking, as long as we're staying below 30.50 or 30.51 area, this has still got scope to the downside. Incidentally, we're currently trading 25 handles below that. So the move down does look very much there, potentially to be played. Key bit for today is holding below this 30.27, the lows that we got on a Thursday last week. So that was why we started to see equities come off. Well, that from my feeling is part of why that it was more slightly technical sort of fallout from the S&P. Once it starts to move, that then starts to drag everything else, which ultimately was already on a down day, and this then turned it from a down with consolidation in European equities to a continuation down. Right, Bund did give us a fair few opportunities today. The main one that I was suggesting this morning though was on the back of this pretty large initial balance with an open test drive down, that if you got back above 55, we had the possibility of running back through this very poor value area, and then a reaction trade from the other side, so a reaction from 82-83 area, exactly what we get. So you got that as an opportunity, and the break above 55s as an opportunity. What we've then had since then, and this is what made it very tricky, that after the touch on the poor value area, we then dropped back down into the IB before then rotating back out. That's a tough trade to have to deal with, and a very tricky one to really suggest that there was a great deal of opportunity to buy on the way back up, apart from the break of that high. Get the break of that high, and that then does give the opportunity of that continuation up towards 176.02 area, up towards that flag retest. We're in fact now moving up towards 09, but I think 02 for the flag retest was quite a reasonable target to be looking for. Not flag retest, trend retest, quite a reasonable target to be going for. But opportunity wise, this was quite tricky. Often you need to look at it from a point of view of where was the the opportunity that you could take with conviction. It's not necessarily about looking back at a day like this and thinking to yourself, oh wow, I could have got on that massive move to the upside. When it was trading back down at 30 after moving inside the initial balance and dropping 50 ticks away from it, is there a great deal of reason to really believe that we should be doing that? Probably not. Whereas the rejection of the move lower and the move back through the open gives an opportunity for a move higher. You then get this flag that holds just around the bottom of this poor value area. Poor value area in play, you're looking then for a movement through it and a reaction from the top. That part of the trade was very, very not predictable, but very takeable, if you will, for want of a better word. It's a trade that you could well have taken. And getting long around 58, you then get this push up all the way towards 83, up towards that top of value, and then the rejection, and well, not the rejection, but the backing off from there, as you would expect the market to sort of balance out that area. So that was a trade that you could well have come in planned for. You could have come in very much ready to try and take, rather than looking back now and thinking, oh wow, I could have got on that massive move without there being any clear trigger for it. That's quite a tough trade to actually really be taking on. So look for the trades that you understand that are available to you. Right, oil. This held below value. All morning we held below value and we got stuck in this range, really. Between 40.60 and 39.90, and then as I said, could well be between 40.60 and 39.37. And that's pretty much what we managed for the morning. Is then afternoon, once those inventories come out, once you start seeing this correlation with other markets, then we break down towards 38.20. So we got down towards the recent VPOT. We've in fact now broken that as well, and so we're actually now looking, I'll bring you a chart in just to highlight exactly how much further we have gone. So here we are, we're here down at 38.20. We have then continued that right the way down to this recent support, which comes in at around about 37.20 up towards 37.45. Decent area to find some support. Very clearly oil is uncertain about this wider range. We've gone through the top once again into that gap back from March, and we're now rotating back down the range. This is going to be a key area for tonight. If we can stay above 37, then we do still have scope to move higher. If we get below here, we're then looking all the way down towards sort of 34.67. Right, onwards to top trades, and what I wanted to have a look at was when that piece of news hit earlier. So not looking at the gigantic move down that we've just had, but the move in the Bund up through 60s towards the top of value, and then the move in stocks down to break the lows. And what this is about is market selection and understanding what your market's doing and where it can go. Stocks at this point was very clearly on a down move. Bund had reversed and was starting to move up. You got that top of value to be targeting, but notice how when this move happens, Bund jumps up to around about the highs of day and has still got 10 ticks to go to get towards that top of that poor value area. Eurostoxx though, very quick, straight through the low. So this is about not just selecting market, but selecting what you expect to happen. Bund, you're looking for continuation up towards the mid 80s, up towards around about 83, 82. Whereas Eurostoxx, you're looking for continuation down. You're looking for the Eurostoxx move to be quick. You're already on a kind of flag. We're already showing signs that this could be trend-like. This is your chance to find out. This is your chance to get on that trend-like move. So I'll bring you a couple of different ladders in. So this is the Bund, starting off at around 60. And Eurostoxx just back up around about 23. So we're just in this zone here. Now, once the news hits, you see Eurostoxx has a very quick slam down. Could you have been short Eurostoxx already? Yeah, quite possibly. For around about 28, it's not a bad place to still be short Eurostoxx. Long Bund, equally, we were inside that value area, so you could well have been long Bund here as well for around about 59 and 60. So again, you can be in a trade before the news hits, and this is where people often fear news hitting when they're in a trade and think, oh no, but it could all go wrong. You can have just as much luck for it going right as you do for it going wrong. You didn't know this news was coming. This came bang around about 10:15. News hits, markets start to move. So still reasonably stable at this point. And what you're then looking for is, once it hits, there we go, Eurostoxx starts to move down. Now, if you're already bearish Eurostoxx, that little bit of extra pace could be enough to get you thinking, yes, this is now worth a sell. Get yourself short. An initial target, you're just looking for a break of low, really. We're expecting this quick move down. You're already looking for continuation down. But if you can get below the low, this then is giving you a chance to then reevaluate and decide whether this has got potential to continue a trend. So basically, this is giving you the opportunity to get in on a get in on a short, to play for a move that you might have been finding it a little bit difficult to get on. With the Bund, this is then one where you've got your objective. Your objective is going to be up towards 80 and then potentially up towards the top of that value area for the reversal as well. So you have a different perspective on what you're looking for with these two. With the Eurostoxx, it's a case of break the low and decide whether you want to hold on to it. With the Bund, it's more a case of once we get up towards 80, this is a chance to take your profits and then consider playing the reversal back down. It's a very different type scenario. So you see here now, Eurostoxx pushing on through the lows. So this is all good from a Eurostoxx point of view. And now this could be a case that as a longer term trade, you'd be happy then to leave your stop back above 10, leave your stop somewhere up here, and try and play this for that continued trend move. Granted, it doesn't play out in the end, but this is giving you an opportunity to select that market for that play. The Bund, on the other hand, one, you could have been in. Two, once it plays, once the move happens, you know that you don't want to be trying to push and push and push this and hold on to see what more comes of it. This is one where more you're looking to get in for the move up and then use that poor value area high as a chance to exit and then play short from 83, which is exactly what you then get back down towards this LVN at 72. Much slower move in Bund. And this is all down toward or to what this is all down to which market you're playing and what market has got certain things set up in it. So make sure you know, before you just go and hit news, what exactly your market has got in store anyway. So where it can potentially get to. So that's the key bit of this. It was not about the managing to hit it. It was about recognizing whether you should be trying to hold on to the trade or whether this should be one where taking your profit, getting out around 80s in the Bund and potentially trying to play a trade that you'd already been planning is the more favorable option. Right, moving onwards then. Last bit, we're going to have a look at play of the week. Gold. Get inside this little block, so above 78.8 up towards 87.6 for the continuation. Not happening. Whilst equities have dropped, whilst oil's dropped, whilst bonds have rallied, gold has done nothing. Gold has in fact backed off from here. Very similar to what we were seeing during the early stages of the coronavirus crisis, where gold wouldn't rally as the risk off came. This is a worry for gold. This would be a worry if you're trying to play this trade. This was the chance for gold to go higher and it's not taking it. So it's a little bit of a worry and we are starting to hold below 78.7, which would be an indication on the short term that this move is over. It's still alive as long as we're not coming back below the gap, but as a shorter term play of the week. We achieved the move through the block. We've then failed to continue. And this then is your opportunity potentially to have come out of that trade. So it's about your sort of stages that the market's going through as we move higher. The next stage up came, we got no continuation on it. And then once that happened, you get that roll back down. And this could be an indication of the end of movement.